Um, Essentially, fiduciary, it's a relationship, it's a legal relationship that you have where, one client, the client places like special trust, special confidence, special reliance in the person that's taking care of their assets. And the fiduciary is the one that has they have all the responsibility to put the client's interest before their own, to never trade ahead of them, to make sure that all of the guidance that they are offering is always in the best interest of the client. And it sounds kind of counterintuitive, because isn't that your job, whether you're a stockbroker or a non-fiduciary? I mean, if you're managing someone's assets.
Well, hello and welcome to Uncommon Knowledge for Seniors. I'm your host, Jim Moran, a realtor and banking executive with over 35 years of experience. This podcast is your go-to resource for navigating the complex world of real estate and senior living transitions. Each week, we'll dive into topics and resources that matter the most to you, from retirement communities, real estate planning, reverse mortgages, trusts, memory care, elder abuse, and more. And whether you're a senior, a family member, caregiver, or real estate professional, we're here to provide you with the most valuable insights and practical, trustworthy advice from some of the best experts in the business. Thank you for joining us, and let's get started. Well, hello, and welcome to another edition of Uncommon Knowledge for Seniors. Today, we're lucky to have Wendie Hohman. Wendie's a senior partner at Sand Creek Investments. And Wendie, thanks for being with us today.
You bet.
And looking forward to hearing your story. But tell us how you got into this thing. What's your background?
I started in the financial services industry really just kind of as a fluke. I was a fitness counselor, and one of my clients, the people that worked out in our gym, worked for Dean Witter Reynolds, which is now Morgan Stanley. And there was a job opening, and I applied for it, and it literally ground floor, wire operator, new accounts clerk, right? And for people new to the investment business, back in the day, stockbrokers used to have to write manual paper tickets for trades. If they wanted to buy 100 shares of Microsoft or 100 shares of Nike, they had to write a ticket, had all the information, buy, sell, if they wanted to do it at the market, at another price, specific price, the account number of the client, all that stuff. And then they come up to the cage where the cashier, the operations manager, and the new account clerk and the wire operator sat. It was a secured environment, and they'd ring a bell, and that was the wire operator. It's a little
sure changed.
Yeah, a little Pavlov's dog there. Ring the bell, and then you have to enter the ticket. And it has to be accurate, and it had to be quick. And that information went to the exchange, and they did the trade. They had a trader over there that did the trade, and off you went. So that was my job for a long time, and I opened new accounts, and then eventually was encouraged to study for my Series 7, so I could become a registered client associate, so I could help the stockbrokers with their business, so they could be out gathering new assets and having deeper conversations with clients. And I could do some trading. I couldn't solicit trades, but I could do some trading, and just kind of take some heat off of them. And then eventually it just kind of grew into, I was a associate administrative manager for Merrill Lynch for a while. That was up in the Portland area, moved back, worked for D.A. Davidson as operations manager, then became the branch manager of that branch. And that's where I met my current business partner, Bill Berner. And it was an evolutionary process, really. I mean, in the very beginning, I had no desire to be a stockbroker. It was just too much for me to appreciate how you could have 100 different households, all that had different investment holdings, and how you managed that, right? How you could keep track of that, how you didn't miss something, how that was just something that I was not really interested in. And then when I met my current business partner, Bill, he was a portfolio manager, and he managed portfolios for clients. He built a model, and based on risk and diversification, and that's how he managed his book of business. So every client was part of one of the models. And that made a lot of sense to me. And he is a cowboy at heart. And so he runs on a cowboy ethics. You do what
Mhm.
you say what you do. Handshake is, your oath, all of those things. So he made it very easy um, for me to embrace the the portfolio management part of it.
So are most of your clients like a family type of a portfolio, or is it individuals, or is it a mix, or how does that look?
Yeah, most of our clients are individuals and families. We don't manage big 401(k) plans. We don't manage corporate assets. It's mainly individual and family trust assets.
Sure. And all that goes along with that,
Yeah.
that's got to be huge. One of the things we talked about earlier was in your business, the difference between a fiduciary and what's called a non-fiduciary um, entity. And I've always wondered about that. What is that?
It really became kind of a a thing or a buzzword. I want to say probably around, the dot-com era, the 2000s after that crash. Um, Essentially, fiduciary, it's a relationship, it's a legal relationship that you have where, one client, the client places like special trust, special confidence, special reliance in the person that's taking care of their assets. And the fiduciary is the one that has they have all the responsibility to put the client's interest before their own, to never trade ahead of them, to make sure that all of the guidance that they are offering is always in the best interest of the client. And it sounds kind of counterintuitive, because isn't that your job, whether you're a stockbroker or a non-fiduciary? I mean, if you're managing someone's assets for their life, it seems like that's kind of a no-brainer. And that's what everybody should be doing.
Mhm.
But Wall Street doesn't necessarily work that way sometimes. So,
Well, I know some of the larger companies, won't mention their names, but are specifically non-fiduciary. Is it like uh, I don't say a conflict of interest, but kind of a disclosure that they that they have? This is like, this may or may not be good for you, but I'm going to do it anyway. Is that kind of what, I mean, I hate to have that issue with my dentist, that would
right. Right. Um, you know, you can dig into the Pandora's box of all of those things. It is certainly something to keep an eye on when you are looking or searching for someone to take care of your wealth and your financial assets, whether they're a fiduciary or not. Sometimes the bigger institutions are not required to be a fiduciary, but the people that they have underneath them have a fiduciary relationship with their clients. So, I mean, the legalese of all of that, you can dig in deep to that, but it's definitely something to look for and be aware of in a relationship when you're building a relationship with an advisor. And in all fairness, just because someone has a fiduciary designation doesn't always mean they'll act in the best interest of their client. We've seen that happen a
yeah,
lot,
yeah.
especially in our industry. So it's important that you pay attention to the relationship and the requirements that your advisor has in the relationship. And they tend to take a higher ground on things than most. So
So from a senior and their families perspective, which I would imagine is the bulk of what you have, right? It would be the
yes.
legacies and that kind of thing. Um, for folks, say, that aren't really involved with a financial planner yet, or financial advisor, what kind of misconceptions do you see that are out there that maybe keep folks from doing that, or not getting involved with the services that somebody like you would offer?
Um, I think the first is cost. Um, uh, and cost is definitely one, trust is another. Um, and just assuming that they don't have enough money,
Mhm.
right? They don't have enough assets to really warrant working with someone. And all that's certainly not the case. I mean, there's some teams, some advisors out there that do have a minimum. Bill and I have a minimum, but if it's a referral from a good friend or a family member, and we already have a relationship, we have that conversation about, we definitely want to work with these people because, you want clients that, have kind of the same value system as you on
Yeah,
some level,
yeah,
for
yeah.
sure.
Well, you hope
Um,
also that you're going to build it to that point too. There's that.
Absolutely. And cost for sure. Our fees are done on a percentage basis of assets under management. And it's a sliding scale. So the more assets you have, or as they grow, which we review it annually. So if their assets have grown, or if they brought us additional assets throughout the course of the year and they've bumped up to an additional threshold, we lower the fee. And if for some reason they draw on that money and it comes down to the original threshold, we don't raise the fee. We just leave it. So fees are important. Yes, they are excessive sometimes, in my opinion. So it's important in your interview process or your discovery process with your financial advisors, find out how they charge you. What do they charge you? What's their billing schedule look like? Is it a sliding scale? I mean, there's a lot of commercials out there that say, when you do better, we do better, right? And that's really true if you charge a fee. So if we charge a 1% fee annually, it's 1%, but we make more money when you make more money.
So what kind of, I guess, looking at a retirement portfolio, obviously you want to retain the value of that and protecting that value going forward. And I know and risk comes into play. And I've always wondered, when you get to be 70, 75 years old or so, and you have X amount of dollars to handle you going forward, your risk is pretty low, I would think. But at what point do you mitigate that? Do you just say, look, maybe we just need to set this up to where we know what you're going to have, what it's going to be, what it's going to entail, and what it's going to look like, and this is it. And we're not going to take these risks in the market and that kind of thing. Is that a typical conversation you have with folks
Um,
or does
I
someone
would
just say, let's just roll the dice and go?
well, on either end of that spectrum, it's really not very cut and dry, right? There's a lot of factors to take into account. So for instance, I had a conversation with someone just the other day. She's kind of late to the game. She thinks that she's behind the curve in, when she's ready to retire, she'll actually be in retirement age around in another 5 years. And so for me, I always start with, what do your needs look like, right? Do you have when you retire, what is your annual income that you have in your head? What does that figure look like? And then what do your expenses look like, or what your potential expenses could look like if you add in additional healthcare costs and so on and so forth. And then you look at the financial package. Where are they? What do they have? And then you try and build from there. And it's clearly an it's an evolving experience, because in the 80s, interest rates were 13 to 18%, right? So you could put your money away in fixed income and treasury bonds and not really take any risk, other than, the United States government, and earn a decent income, a decent return on that. Then when the great financial crisis came along, interest rates went down to zero. And so the risk parity there was pretty broad. You weren't going to earn any money on your fixed assets because the interest rates were next to nothing, and you could, but you had to take more risk. And so people started getting into, the equity markets more, trying to buy dividend paying securities, and they played that game a little bit. And now we're back starting to see a more normalized interest rate environment where, on the short term, clients can earn, 4 to 5% on treasury bills. And so the the spectrum is always kind of changing there. I'm not one to say, hey, you have $200,000 to last you until the end of your life. I mean, that really is the biggest question. That seems to me to be the biggest fear that our senior investors have, is outliving their money.
Mhm. Sure.
And if they have $200,000 or $250,000 and they're 77 and they live for another 20 years, which is pretty likely nowadays, um, we're going to have to work pretty hard to that. Putting them in a 4% 3-month treasury bill and rolling that through the rest of their life is not going to accomplish what they need. So there has to be some risk taken there, but you have to figure out what that looks like, and where additional assets could come in, whether they have a home to sell, whether they need to adjust their personal living lifestyle, just a variety of things. How does their family play into any kind of future benefit to them or help if they need it from their kids? So it's a huge moving target, and it's not ever a static conversation.
Yeah, and I imagine too, just the idea of putting a budget together, I think for most folks is really tough. It's hard for me. It's hard for I think anyone to really face the music, so to speak. But what a relief it is, I think, once you do that. It's like Jesus, burdens off your head, and now you know, and you can at least move forward with some confidence and not have to be wondering whether you're going to be able to make this work or not. And I think that's just a huge question.
Yeah, absolutely. And this wonderful woman that I had a conversation with just the other day, that's exactly how she felt. She left me a voicemail this morning saying, you don't even know how much better I feel. She said, I realize I'm where I thought I was, but now I have a game plan. Before, I didn't even know where to start. I didn't know who to call. I didn't know what to do. And now we have a plan. And you're absolutely right. Just the burden of that helps people sleep better at night, for sure.
And then you have the whole medical issue, the uncertainties of that kind of thing. And I think toward the end of life, so to speak, that's just, God, that's expensive. It's
Yeah.
cheap to get sick anymore. I don't think it ever has been, but it's,
Yes.
a buddy of mine say years ago, he always felt that, he says, this retirement thing isn't much fun unless you're rich and healthy. And
Oh.
I think that's always stuck with me, and it's always
Well, let's all get rich and healthy then, right?
yeah. Well, that's like, so do you get involved with long-term care, or other than here's what that's going to cost type thing, or do you that's always been such an expensive thing, and it seems like it didn't used to be. Now with the more and more people turning this age, it's just the premiums seem to have just turned up to be almost untenable at a certain point.
Sure. And it's a concern, but it's not really a concern for everybody. I mean, again, you start to see commercials and news media, saying you have to have long-term care. You have to, and sometimes it's not necessary. Sometimes it's financially not in the bailiwick of the client to be able to afford long-term care. So we outsource the long-term care conversations because it's not really our expertise, but I think it's important that you have a group of a panel, if you wish, of trusted advisors that are experts in all of those situations, whether it's Social Security care, Medicare, financial stuff, estate planning, legal stuff, and definitely insurance. I certainly don't put myself out there as an expert in all of those areas. I have 30 years of experience and exposure to most of it, but when it's time to outsource, it's time to outsource. And Bill and I do that with the insurance products for sure.
We're finding so many more people, more and more, I guess like 80% of retirees and such really want to age in place. They want to be in their home. They don't want to go to the quote unquote assisted living or something like that. And the whole multi-generational thing is coming into play too, and we see that so often, and what that looks like, and is the is the home they're in going to be habitable for what they're going to be facing, getting older, just getting around, and
Sure.
the master on the second level just isn't really a viable option anymore. And it, it's interesting to face that with folks, and to show them what some of the options are, and what's possible out there. And uh, Bend is one of these places that there's not a lot of options for single level homes. The builders are and they make more money building a two-story. And
Yeah.
it's just that inventory out there. It's just sometimes not there. And I think they have to look at their pocketbook and what's available, what the family's going to be able to offer them, and going down that road, and actually going out and seeing the options. We found that you can talk about them, but it's better to have them just get in the car and go see these things. And like, is this a place you could live? Is this something you could deal with? Is this, isn't this nice? Is this not nice? Is it just something that you can work with? And maybe you need to give up that two-story home on the 3 acres. That
Yeah.
you have to work hard for that, but
Sure.
it's always a transition that we try to involve folks in, and the whole system. What kind of pitfalls do you see folks not taking advantage of, or advice you would have for somebody who's coming to you to figure out what I'm going to do? I know we've kind of brushed on it a little bit, but it's like, doggone it, I wish these people just knew that they need to do that, and does that ring any bells with you?
Um, Really, for me, probably one of the most frustrating parts of of my role with clients really doesn't have anything to do with the performance or managing their portfolio. I mean, that's for us, that's the easy part. I mean, it's not easy, but that's the easy part. The most challenging piece is the estate planning piece. Um, do they have their future assets set up in such a way, their accounts set up in such a way that they're dispersed the way they want to? And the conversation either is, no, I really need to work on it, or yes, I absolutely do. But a lot of times when you dig into I absolutely do, they absolutely don't. It's not what they thought. It's not set up the way they wanted. Whether it was a trust that they drew up 20 years ago and now they're remarried, or they have multiple grandchildren, or there's something that's going on in their life now that the disbursement of the trust assets, once both trustees pass or once both grantors pass, it's nothing. It happens nothing like they thought. And the beneficiaries are the same way on their retirement assets or their life insurance policies, or whatever. It's very frustrating, and it saddens me a lot of times, because I know I spend so much time talking to our clients and having that relationship, and when they do pass, I watch the chaos that happens after, and it's just gut wrenching, and as many conversations that you have with your clients about it, they're going to do what they're going to do. So you just need to be there to support them, give them as much research and tools and education that you can, so that they actually do understand how their trust works and the purpose of it. Again, just like I was talking about long-term care earlier, sometimes people don't need a trust. Sometimes they just need beneficiaries. They need certain things, and and they don't need to go through the expense of having a trust drawn up. And it will accomplish all of the same things that they're trusted. So, and there always seems to be, not always, very often there seems to be a disconnect between the conversation that the attorney is having with the client versus the conversation that I have with the client, as far as what happens on the financial side of it, right? The attorney has a legal side, but when you start dealing with financial institutions, just because you have a trust drawn up, but you didn't retitle your assets, right? So you didn't change your bank account to the name of the trust. You didn't retitle your home. to the name of the trust. You didn't take those extra steps because you just assumed, now that I have this trust document, the trust owns everything. Well, sometimes it actually doesn't. And then the heirs are forced with having to go through probate because assets were not retitled in the name of the trust as they should have been. So it's really important, I think, for me and I think for our clients to make sure that their attorney and us and the client are all on the same page. We at least have one conversation a year or every other year to make sure that everybody's on the same page, everybody knows what's going to happen. And I think in the instances where that has been the case, both the attorneys and the clients and us appreciate that combined relationship much, much more, because sometimes the attorneys, they do their jobs, they do their legal job, and it helps broaden their perspective a little bit on the challenges that we're faced on the financial side, and just making sure everybody's on the same page. So
Well, that's the whole point, right? I mean,
yeah,
it's just why wouldn't you want to do that and have everything be what it is? And I get it, there's all the fears and the concerns and confronting this and confronting that, and I don't want to think
superstition.
yeah.
People are very superstitious.
Oh man, yeah, it's just it just goes on and on and on. But I think that's
Sure.
part of the deal, though, is it being, maybe just being forceful about that. And just say, look, I'm just trying to really help you here, and this is what I do, and I'm real good at it, and you need to confront this and really think about it. Because I think that, to your point of the folks that have gone through a probate, and it's years, it can be years in terms of trying to mitigate that, and it could have been simply taken care of with an appropriate trust and all that that goes into it. And a lot of folks feel that, well, I don't have enough money for a trust. And it's like, well, you really don't have enough money for probate. And I think that's the other thing, it's not
Yeah,
like a free thing.
probate doesn't have to be a scary thing. I mean, truly, it's really just validating the will and enacting the terms of the will. And that's really it. It doesn't have to be as scary as a lot of people think it is. I've gone through it with both of my parents. And yeah, there's some extra effort involved and whatnot, but none of it really should be scary, but yet all of it is, right?
Mm.
The financial part, the healthcare part, the real estate part, all of it is scary because it's overwhelming. Especially if you haven't really paid that much attention to it your entire life. You've been raising kids and working, your life away and all of these things. Once when you're forced to sit down and look at all of the options between the Medicare, healthcare, all of that, it's overwhelming and it's fearful. But that's my job, that's your job, to ease that, so that they can sleep at night and they don't have to worry about it. Because who wants to do that? I mean, when you're in your wonder years, you don't want to worry about that stuff.
Yeah. So what's your process with somebody, say, that you haven't worked with before, and they approach you and just say, geez, I think we need to get our act together here. Do you have like a hour consultation or something like that? Or what's that look like?
Yeah, we absolutely have them come in. We like to be face to face if we can. If they don't live locally, that's fine. But we do prefer Zoom meetings like this so they can get their eyes on us and we can get their eyes on them, so that everybody knows we're real people. And have that conversation. Where are you at? What do your financials look like? What do you hope to accomplish? I mean, do you have someone currently that you work with? And if so, why do you want to make a change? What do you know about us? We're a referral-based business.
Mm-hmm.
So most of the people that come to us have a pretty decent idea of how we manage assets and what we do. For people who don't know any of that, we have that conversation, but it's really all about them asking the question, what do you want to know? How can we help you? And then we kind of build from there, and we help them understand. We usually have the actual portfolio management question, or the in-depth portfolio management conversations a little bit later, because really it's all about building trust at the very beginning, right? Ask as many questions as you want. Does it feel right to you? Does it feel right to us? Here's what we can offer you, and this is pretty much what it's going to cost on a relative basis. And rapport build and build a relationship. Really. That's the
Sure,
first
a lot
part.
of things, isn't it? It's just this kind of how things work. It really is.
Yeah.
Um,
Yeah. And then, like I said, we have the portfolio question, the portfolio conversation later. And then we send out a weekly email to clients every week that gives them an idea of kind of an overall what the markets are doing, what we're seeing in the marketplace, how, the model portfolios are doing, any changes that we're making, and then just kind of a commentary about, here's what we're seeing, and this is how we feel in this environment, and what we're paying attention to. Are we in a bear market? Are we in a bull market? What's happening, and explain that a little bit. And that really helps, especially new clients, get a feel for how we view the market, how we manage their assets, and how we do things. And so we add them to that right away. And then they're welcome to call or email or have questions on that as often as they like.
And I guess there's a certain point where you can just say, no, I can't help you. Does that come up? I would imagine I know it does with me sometimes as a real estate broker. It's like, I think somebody else better work with you. And
There certainly have
thankfully, honestly, graciously.
absolutely, there certainly have been instances, not very many, but there have been a few where, and for again, it's for us too. This this relationship is really, there might be someone else out there that would be better suited to help you with what you're looking for. I mean, we've had some younger investors, potential investors come in, and they want, they want the quick GameStops, they want the quick Facebooks, they want the quick turnover stockbroker. I'm going to pick this, what's going on, pick that, pick this. And that's not how we do business. And so we refer them or encourage them to seek alternative methods for their investment. So it does happen, not very often, primarily because we're a referral based business. But it does happen.
Yeah. Well, good. Well, Wendie, I thank you for this. This has been great. What's the best way for folks to get in touch with you? And we'll have your information in the show notes as well. But
they can go to our website, which is sandcreekinvestmentpartners.com, and it's partners plural. So sandcreekinvestmentpartners.com. It has information about Bill and I, our history, how we view the markets, our fee schedule, all of our contact information is on our website.
Do you have any geographic boundaries at all? Do you stay within Oregon or
Nope. No, we're happy to work. We have clients pretty much all over the country. So yeah, as long as we have the license in the state, we're good. And we're licensed pretty much everywhere. So
Wendie's been a pleasure. Thank you very much. And
thank you, Jim. It's been it feels good to have these kinds of conversations. I know there's so many folks out there that just kind of spin in circles, chase their tail a little bit, and they don't have to. Really want them to know that they don't have to. There's people out there to
and we've both seen the results of not doing that.
Yeah.
And it's painful.
Yeah.
It's kind of what the whole impetus of even doing this has been. If I can have somebody avoid that, out of not knowing, now they can know. So
sure.
Thanks very much.
You're very welcome.
Talk soon.
Okay.
Thanks.
Yeah.
Thank you for listening to this episode of Uncommon Knowledge for Seniors. I hope you found the information valuable and inspiring. If you have topics or circumstances you'd like us to address, please let us know. And don't forget to subscribe to our podcast and visit our website. We're at www.uncommonKnowledgeForSeniors.com for more resources and to schedule a confidential consultation. And until next time, I'm Jim Moran, reminding you to embrace your next chapter with confidence and clarity. Take care.